Novo Capital, look, it's a private fund managing over more than 2 billion assets and under management. Your core values, that brings particular exposure to Chinese companies. You're the perfect voice, Ben. Are you struggling with a lack of clarity, or do you feel that you can invest in this moment?
Well, I think from a Chinese perspective, actually the country is pretty well positioned. China has been bearing the brunt of U.S. tariffs and threats of tariffs for years now across both administrations. And so China started much earlier than any of other American trade partners in starting to think about offshoring, friendshoring, nearshoring. Investors were threatened with 60% tariffs prior to Trump's election. And so actually a lot of those kind of very high noise numbers are already baked into people's estimations. And so I think you've seen actually the Chinese market outperforming this year relative to its U.S. counterparts.
It's also been outperforming in large part because of the generative AI wave of news, the fact that innovation seems to be back front and center. Is that something you've been betting on too, Ben?
Innovation was always there. I think the issue was that global investors, particularly Western investors, didn't price it correctly. The Chinese market was fundamentally undervalued for the last few years. Chinese equivalents of their American companies valued at many multiples lower. And I think some of these more visceral, understandable, concrete actions like the DeepSeek kind of Sputnik moment, I think awakened global investors to really reevaluating these businesses on their fundamentals. And they recognized that actually there was huge amounts of innovation going on in China, particularly in the AI space, where China was always neck and neck with the US. And it's not just DeepSeek, it's Alibaba, it's Tencent. And so I think people kind of woke up out of their sleep and recognized that the market was fundamentally undervalued.
Well, then what about innovation in the United States as we see tariffs take an impact? Is it hurt?
I don't think so. I mean, the American innovative spirit remains intact. Global top minds still flock to the United States and are integrated through our universities into the American workforce, most of them becoming green card holders or U.S. citizens. The same kind of query was asked of the Chinese when they were kind of taking their steps to kind of rein in entrepreneurs a couple of years ago, when we saw the antitrust measures taken against, say, Alibaba and Meituan. It was a similar narrative. Was innovation and entrepreneurship being hurt? So I don't think that's the case. And if anything, America is going to put its foot on the gas on innovation over the Trump era. We will see, a lowering of a lot of the red tape, the regulatory hindrances, bureaucracy that was getting in the way, more tax support, more kind of integrated thinking across departments to support innovation. So I expect actually a boom in the U.S. innovation, not a decline.
Ben, you are close to the administration. We understand that. When you're trying to give advice to those currently over in Washington or any other investor trying to search for clarity right now, do you help people ultimately eat their vegetables with what might longer term be an innovation boost? There must be pressure on certain particular parts of innovation when it comes to robotics, when it comes to semiconductor access, for example.
Well, so first, I think, things aren't as volatile or unpredictable as people think. We're essentially doing what the president said he would do. So if you want to know where we're going, read what he said, watch what he said. This is not a huge surprise to anyone who was following him over the last, not just over the campaign trail, but over the last decades. And then, certainly there is going to be short-term pain. A lot of the key inputs to our supply chain, be it automotive, robotics, the rare earth materials that go across all kinds of different core inputs, all of those are going to be hit in the short term, which will mean some pain. But ultimately, we have to find a way to wean ourselves off dependence on particularly, obviously, Chinese inputs. We need to either onshore those supply chains or nearshore or friendshore those with countries that we know we can rely on for decades to come. And I think this will ultimately serve to protect America's supply chains and ensure that it is not going to be vulnerable to a geopolitical adversary over the coming years.
And what about some of the winners? 2023, 2024, NVIDIA comes to mind, of course, some of the key chip makers, which now many are worried through regulation won't be able to access some of their end demand points. Geopolitics getting in the way of that too. Is that the sacrifice that's worth it?
Well, that's not new. Again, I mean, we were already seeing chip bans and coming particularly out of the Biden administration over the last 4 years, exporting those chips into China. And of course, many of the American chip manufacturers, NVIDIA aside, saw 30 to 40% of all their exports going into China, and China's obviously done incredibly well building 5 and ultimately 6G hardware, mobile handsets, and so it is a huge demand market for those consumers. So what we have to find a way to do is continue to do business with China without giving them our most cutting edge chips. So ensure that Chinese consumption is still helping to underlie and fund American research and development and innovation, but make sure we're still ahead on the kind of most cutting edge chips. And so that's where these chip bans come into effect, and we've got to ensure obviously that those aren't being circumvented by third party countries as well.